Hello and welcome to episode 31. This week we reveal who won the battle between our AIM-listed companies, we have a portfolio update, and we battle two more stocks against each other with this week's theme of best recruiting agents. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. Two smaller AIM-listed companies battled it out last week, the hospital disinfectant Tristel and the communications guru Gamma. Well, they cleaned away the competition because the winner was Tristel.
3, 2, 1, go.
Last week saw some relief with lovely green throughout the portfolios. This week, however, back to the same old story. The benchmark, the FTSE All World, down 1.4%, in line with the S&P 500, and the Battle Royale performing much better actually, only down 0.3%. Biggest movers in the Battle Royale over the last week. Very happily, they're a little bit more balanced than they have been in past weeks. Surprisingly, it was a REIT that jumped 8%. Absolutely shocking. Less shocking, Reddit dropping another 7%. Overall in the Battle Royale, and as a reminder, we're looking at this total return column. Not much change at the top. On the beach, still performing the best. Nichols, Tesla following them up. The newest addition that we added last week was the Nasdaq, and unsurprisingly, it's performed poorly so far, down 1.9% on the week. Going further down, I'm surprised, well, not surprised, but it's unusual to see your Apples, Nvidia, Microsoft, all the big names that we're so used to seeing just go up and up and up, all losing us money so far. And at the bottom, Black Rifle Coffee, B&M, Reddit, not much change there. So more difficult reading. This correction is killing me. 29 holdings, 20 of them in the red, and only 9 in the green. How's the income generator doing on our dividends? Well, it's now paying us £22.59 per annum, up from £21.82 last week. We've locked in £2.43 from December, and now in April, I think we're going to get an extra £4.62, leaving us with, hopefully when we get paid out, £7.05 to pay out to our subscriber. In June now, we get to look further ahead. June's our big payout. We're going to get £8.31 at the moment, and September will be £5.11 for our next payout, which should be a whopping total of £13.42. We've now added £725 to each of our 3 portfolios, and last week things weren't looking great, but they were moving slightly more in the right direction. Battle Royale down 4.4%. Not doing as well as the benchmark, which is only down 1.5%. This week, however, we've returned to normal service of doing worse, and the Battle Royale has slipped to 4.7% down, whilst the benchmark is down 2.8%. Not great reading. The income generator still in the green, amazingly. And overall, we've now invested £2,114. We've lost 2.4% of that, and we're currently gaining for almost £40 in dividends.
3, 2, 1, fight.
Recruitment has been compressed over the last few years, and recruiting companies have been struggling, with a few even currently remaining unprofitable. However, it's a really low-cost industry. They seem to have low debt, so they could be well positioned to weather the storm. And the question is, if you think things are going to turn around, they could be well positioned to do well in the future. A lot of them have cut their staffing, so their costs are even lower than normal, and as soon as they start bringing the money in, they could really profit. The question is, which one is the best one to go for? I had a look at 4 recruiting agents. Manpower Group, listed on the New York Stock Exchange, Hayes, Page Group, and Robert Walters, the last 3 all on the LSE. It was quite difficult. There's not a huge amount between them, but I'm going to drop Page and Robert Walters off the hit list. Valuation-wise, Manpower Group is looking fantastic. It is 81.9% undervalued apparently, and Hayes is 59.0, so quite impressive on that regard, but that's possibly because they don't make any money. So why do we care about their cheap valuation? Well, they've got fantastic financial health. If you look at both the snowflakes for Hays and Manpower, they've both got great financial health. If you look at their debt, it's not much at all, and they hold great cash positions, both of them relatively similar in that regard. Not all about that, because yes, they can survive, but who cares if they're not going to increase? And this is what I find really impressive. Hays has a projected earnings growth rate of 89.8% and an earnings per share growth rate of 88%. So you might be thinking, looking at the snowflake, why Manpower looks like such a much better option than Hays, but Hays has this impressive growth. Manpower, not bad at all, but not quite as good, 23.4 and 25.6. If I quickly show you a graph illustrating their financial health, the red is the debt, the blue is the equity. A lot more equity than debt, and just holding nice and steady between the two. For Hays, a similar picture, not quite as good, and threatening to come a little bit closer, but not too bad all in all. They both have pretty good dividends. Hays pays a 3.6% dividend and hasn't bought back any shares, but hasn't been issuing more shares, so that's a good thing. I'd say net neutral. With Manpower, 5.3% dividend, quite healthy, and they've got a nice 5.1% buyback yield. And just to remind you, Hays was 3.6. So they both seem like good companies. They've both got decent future growth projections, and now could be the time. So do we go with the slightly more robust Manpower and healthy all around, or do we go with Hays that has a slightly better growth outlook? Which one do you think? So there you have it. Which one do you think we should invest in? And as always, let me know if you think there's a company out there that I've missed. Otherwise, vote in the comments, but I think that the winner should be... I hope you've all enjoyed your Mother's Days. I hope you don't think about tariffs, and I hope you have a wonderful week ahead. Thank you so much for being here.
Goodbye.